Fiti. Haya, welcome to my channel, of course. I'm Onyansha.
So you say your name start to done
Buying shares in Kenya. Today, we'll be talking about buying shares in Kenya. Yeah. And what is a share? Things you need in buying shares and everything you need to know in buying shares in Kenya. Specifically, let's talk about shares in Kenya. If you've probably come across memes and street talk claiming that buying shares is a scam. Ignore that noise. Yeah, it noise. Actually, include them in the noise list. Erase them from your WhatsApp, delete their number, be just the one who you are. And let's talk facts, financial literacy, and long-term wealth creation the Kenyan way. Yeah. And what is share investing in Kenya? Share investing means buying part of ownership of a company listed on the Nairobi Securities Exchange, that the NSE. And I'm advising you to go and do some research on the NSE, know what they do, and know what they do, because every day you learn. Just be learning. Instead of going TikTok, watching reels each and every time, spend your 4 minutes, search what's NSE, its function, its roles in our country. Thank you. Once you buy shares, you become a shareholder and legally own a percentage of that company. As the company grows, your investment can earn through share capital, share appreciation, and dividends, usually paid at the end of the company's financial year. If you are a comrade, especially someone like me, I'm a comrade. Now, you have a source of income, maybe side hustles, allowances, you have a biz, or you are employed. Because some of us are employed. Not me, but some of you are employed. You're working in supermarkets in Nairobi, you are conductors in Supermetro, you're drivers. Some of you are earning very big. Don't spend everything on short-term luxuries. Adopt and earn now, invest now mindset and let your money work for you. I want you to repeat this after me. Earn now, invest now mindset, and let your money work for you. Yeah, you don't have to be working every now and again. And let me tell you something. You see the things we want to do right now, people who are doing them are at the age gap of 60 to 78 years. Yeah, those are people who have retired. They are now earning without working. Let's start now, because, okay, we need financial literacy. Okay, we don't need to work so hard. Okay, we need a very smooth life. Okay, we need a good life. Yeah, a very valuable life in our country. You live a very good life. And if you're a comrade, we are done. Understanding the Nairobi Securities Exchange, because it is one of the things we should know by now. The NSE is Kenya's financial. Okay, it's not a financial, sorry, but it's official and regulated stock market. It allows companies to raise capital and investors to build wealth. When you invest at NSE, you can earn through capital gains where share prices rise, dividends, profits and shared with investors, bonus and right issues, long-term ownership in reputable Kenyan companies. Share capital and ownership percentage. A share represents the unit of ownership in company. Share capital is the total number of shares issued by a company. And when you buy shares, you probably own a percentage of the company depending on how many shares you hold. Share price at the NSE fluctuates daily based on demand, company performance, and the overall economy. And now let's talk about dividends in Kenya. I said we are not talking about anything but the things to relate to Kenya. Dividends are paid from company profits and are usually deposited directly into your bank account or in Pensa-linked accounts depending on the registrar in Kenya. And let's note this down. Not all companies pay dividends every year. Stable companies like banks and blue chip firms often pay cost entry. Dividends are subject to withholding tax as per carrier regulations. And how to now let's know how to identify a good company to invest in. Before you do what? You put your money somewhere. Let's know this. Before buying a share, look at the company's financial statement, profitability and dividend history, debt levels and expansion plans, market position and leadership, industry outlook, and always invest in companies you understand. Go get a gazette, a newspaper, read news, search news about companies that are good to invest in Kenya. Go to Equity Bank, search about its history in financial performance, because sometimes there are companies who promote their reputation and names. They are saying they are making a profit of $40 billion per year. But when you see the employees, they are paid very, very low. So choosing a licensed broker in Kenya, because you need a broker for anything you have to do. Only UCMA licensed stockbrokers approved to operate in Kenya. A licensed broker ensures safety of funds, proper execution of trades, access to official NSE trading systems, compliance with financial laws. And now let's talk about opening a CDS account. A CDS account is an account that you need so that you can see the flow of your shares. You must open a central depository system, that's the CDS account, which stores your shares electronically. Requirement to open a CDS account are as follows. You need a Kenyan national ID or passport. That is why we are performing, that's where we are performing now our KYC. KYC means know your client or know your customer. Now we need a KRA PIN and completed KYC forms. Yes, passport size photographs and a valid bank account for dividends and refunds, of course. Contact details, phone number and email. And once you see this account active, you can buy and sell shares through your broker or approved trading apps. And for your CDS account to be approved, it takes only 3 to 4 days, because it's an action done by the Central Bank of Kenya, that is the CBK, and not the bank that you are opening an account as a broker. Tax and regulations in Kenya. Dividends are subject to withholding tax. Capital gains tax may apply when selling shares. All transactions regulated by the Capital Markets Authority, that the CMA. And finally, what can I tell my fellow youths? The stock market is not for the rich only. You might think, oh, don't want to invest in this because I don't have enough money. No, it is for the informed. You have to learn. It is for the smart people. Be consistent and think long term. Wealth is built gradually. It is not something that you sleep today and tomorrow you are rich. I hope you remember Kibaki something. He said, oh, how suddenly you become so clever. Yes, it must follow some logic. Thank you. And if you regret after following this advice, come and slap me. Thank you for listening to me. And please remember to leave a heart like for me. Thank you.